in a way. On the downside, not everything has seen those increases. On the upside, certain category of properties in certain locations have seen even stronger increases than those mentioned.
Yeah, I think that's a crucial message, Rob, actually. On a macro basis, the market has been performing extremely well, and like we said, these double-digit growth.
Hey everyone, welcome back to another edition of Super Prime UK with your Super Prime valuation specialists, myself, Rob Cohen.
And myself, James Wild.
Hope you're all well, hope you all had a good week. Super excited to be back on another show. Lots of news happening. The markets are moving fast, the world is moving fast. Uncertainty, certainty, data, intel, everything's coming quick and moving forward, and we're well into the year now. New month, February 2022. January is past, everyone's worst month of the year, without question. January out the way, and we can really hopefully look forward to exciting year ahead and hopefully some good intel on data this week, James.
Yeah, thank you, Rob. So if we firstly start with our transactional data. So in the last week, we've had around 260 new instructions here in London. And in terms of the sales, 125 sales. So the main figure there obviously being the transaction volumes of 125, which is in terms of the average of last year, which we'll move on to what a outstanding performance year it was, Rob, shortly. But that really is in line with how we started this year. It's been a pretty positive, 125. We are down slightly on the new instructions for this week, but in terms of agents across London and the UK, all agents, their books are really struggling for new instructions, new stock at a period where people do often bring their houses to the market in a sort of a January period with getting traction through to that sort of springtime period.
Yeah, let's just share the message loud and clear to everyone listening, watching, or on the podcast. Supply and lack of stock is a real issue, a real challenge with both sales and the lettings market, especially with housing stock, with outdoor space. There is a huge demand for that specific stock, and there is a lack of supply coming on stream, which is creating pricing pressure. Been speaking to all the agents throughout all the areas and markets that we work in, and it's the same story, the same message that's coming through very loud and clear. So lack of stock, lack of supply, which is putting pressure on pricing, both sales and lettings.
Yeah, and just to recap, Rob, it's been a positive start here in London and across the UK really in terms of January. Nationwide released some data this week. It's been the strongest start to the year for the UK housing market in terms of the prices since 2005, according to the Nationwide Building Society. It revealed that there was an 11.2% annual increase for the period up to January 2022, and the strongest start, Rob, for 17 years in terms of that sort of bounce as we move into 2022.
When you break down those numbers, and again, this is really important for all of you, credit, risk, the lenders, buyers, sellers, everyone in the market, that number is obviously a medium, homogeneous, generic number. When you break down the nuances behind that, what you'll find is certain stock hasn't moved, maybe seen a slight decrease, but other stock has superseded that 11% figure, especially where it's in a market, an area or a location where maybe you've got multiple bids or multiple applicants looking to purchase, and again, a supply or stock issue. So sense of caution in a way. On the downside, not everything has seen those increases. On the upside, certain category of properties in certain locations have seen even stronger increases than those mentioned.
Yeah, I think that's a crucial message, Rob, actually. On a macro basis, the market has been performing extremely well, and like we said, these double-digit growth reports, which we're getting almost month on month, Rob, aren't we? But indeed, the total number of property transactions in 2021 was the highest since 2007, and around 25% higher than 2019, which was obviously before the pandemic struck, which just highlights what a fantastic year 2021 2021 was in terms of property transactions and also the growth?
I think what's key, again, everyone in credit and risk, listening and watching, our concerns were, would the market fall off a cliff? And it clearly didn't and hasn't currently. So many of those concerns were the questions that you were asking us every week on the show. What's going to happen? What's going to happen? What's going to happen when the stamp duty window closes? Is the market robust enough to continue? And the inflationary pressures of the economy that we've seen and the slight increase in interest rates putting concern into the mortgage market and the lack of supply and stock now putting further pricing pressure has allowed the market to continue and remain robust rather than falling off a cliff, which was a major concern for a lot of you risk people out there.
Yeah, and as you say, Rob, the stock of homes on estate agents' books has remained extremely low for a lot of branches of estate agents and independents, which is contributing to the continued robust pace of the UK housing market in terms of price growth on a macro level on a national basis.
I think what we're seeing at the moment and what I've seen over the last week, even since the last show, is there are multiple bids on the right properties. And what do I mean by that? Because a lot of people are looking for certain properties in certain locations. When they come onto the market, they're like gold dust. So you've got multiple inspections, multiple bids, pushing premiums onto those properties, and people are willing to pay those premiums to secure what is a gold dust property. And that's a real trend that even in the last week is continuing, I'm seeing very clearly in the market.
Thanks, Rob. And just moving on to some retail news here in London. Ikea is set to open one of its first high street stores in Hammersmith, West London. The Swedish retailer is typically known for its out-of-town sort of retail park type stores, really, that are like very large warehouses, very cleverly designed to have you navigate through every single section before you can sort of pass the exit. But it's going to open one of its first small format stores in the high street in Hammersmith. It's going to be around sort of 4,500 square metres, opening on the 24th of February. This shift, Rob, to some of the larger retailers opening smaller stores in city centres. Ikea, their digital model, sales grew by 73% last year. They had a staggeringly good year, which I guess is a rebound effect of there being so many house transactions, people furnishing their homes, and maybe with lockdown, more working from home, people are having home improvements as well. So in terms of Ikea's turnover, £1 in every four spent is actually online now with Ikea. And what are your thoughts on this in terms of them opening these smaller format stores, Rob? Is it something that other businesses are going to implement this model, or doesn't it work for every business?
I'd be following that space very closely, and very close to home for us as well. Tottenham Court Road, the Ikea High Street store opened, and then during lockdown closed its doors. So it'd be interesting to understand why that one possibly didn't perform in a very key location, especially a central London one. So I'm interested to understand that. At the same time, of course, it makes sense that they're performing so well when the housing market performs and you have that drip feed to the rest of the industry, especially building construction, which has been the platform and the foundation of strong economic performance like we discussed last week. So it makes sense perfectly that Ikea are performing well because the housing market is performing well, and moving to the high street is probably, again, another logistic play similar to the Amazon play, and I think it's a watch this space, and Ikea generally don't get many things wrong.
That's it. It's a bit of an experience with Ikea as well. I do understand there's going to be a deli serving their Swedish meatballs, which was again sort of a bit of a spin-off and making something that people want to go to the stores just to even to have a look or to check that out, really. In addition to that, Ikea has paid £378 million for the former Topshop flagship store on Oxford Street, which again is going to be another new Ikea store. That one is set to open in the autumn of 2023 with sort of more extensive fit out there and a really prominent position, Rob. I didn't see that coming actually.
So that's an interesting one, because think about Ikea historically, out of town, retail parks, large space, everyone drives there, fills up their cars and then goes home. In line though with what you've said, a digital experience, maybe people go to the shop, put their order in, do it online afterwards and so on. So I think that's an interesting one. I think I'd love to see how that works. It goes against all of their historic modelling and performance, and I think it's a major statement.
Yeah, and I know Ikea has expanded in terms of their sort of kitchen fit outs, and you can sort of buy kitchens and appliances from Ikea. Maybe it's that sort of home design sort of play which they'll be working on there, and a bit more of a sort of captive experience. They'll be the consumers will be getting it in that it'll be the Ikea flagship store really when that opens.
I mean, it's a major footfall thing in terms of, you know, not many locations in the whole of the country are going to get the greater footfall. And then the question is, when people are walking up and down Oxford Street and all the major shopping areas in London, are there intentions to go into an Ikea? Obviously, their thought process, absolutely yes, that's what people want to be doing on a Saturday and Sunday afternoon.
Yeah, and with Ikea, like I say, it's an experience. You sort of go in almost for ideas and end up buying other things whilst you're there. Just one of those stores, they sell sort of absolutely everything. But in terms of that deal, it's a big boost for central London, which did see footfall plummet during the pandemic, and numbers have improved, visitor numbers have improved in the city and the West End, but they're suffering fewer tourists than previously, because obviously it's a draw for both domestic tourists and overseas, but with the return to office workers now gaining a bit of momentum, we'll hopefully by that time that opens 2023, we'll be in the new norm, Rob.
I just think, you know, 2022 on this show, we've been tracking the big deals, and 3 weeks in a row we brought blockbusters with Broadgate UBS, followed by Google, now Ikea, and the big global entities are putting faith in the high street, in the office market, and in prime locations. They believe that those markets are returning, hence those transactions have taken place. I think that's a major statement that we've seen January 2022 in areas and marketplaces, high street, office, that people were questioning in 2021.
That's it. And with the Back to Work initiative, Rob, Pret has actually raised his coffee subscription, hasn't it? £25 now a month. That upset you earlier.
Well, it's you know, hopefully there are a lot of people out there that want to join this conversation. Please feel free to contact me. Anyone that's signed up for the Pret subscription has now seen a 25% increase in their monthly subscription on the back of inflationary pressures and other additional costs. And I'm interested to know whether the loyal Pret fan base, want to know what your opinions are on that actually. I'm interested to know, are you happy to pay that? Are you not happy? Are you disappointed? You feel it's great value for money? I personally think it is great value for money. I think that, you know, they're offering their client base a very strong product there. So interested to know your thoughts on that. Please share.
Yeah, the amount of cups a day that we drink, Rob. Anyway, Purple Bricks has delayed its half-year results in terms of its accounting, but has now released its accounts to show a £20 million loss. The firm's CEO has cited lower instruction levels as being one of the blocks in terms of their losses. However, as we've reported, Rob, 2021, one of the highest transaction volume years we've seen in the residential sector. I mean, surely that was a big opportunity for them. And what do you think the future is on those online agents? Does this sort of spell the end? Does it spell trouble? Or
you would definitely have thought that the pandemic and the superb volume of transactions over that period would have been, you know, pardon the pun, right up their street. to have tremendous performance.
Exactly. You can't visit those physical estate agency branches. You would have thought that would be a perfect storm for them to perform well.
I think that the main UK residential agency brands have really upped their online game and really upped their presence, and they've stopped Purple Bricks in their stride. And I think there is a market for sure for online, for all aspects of all industries. What I would say from our perspective, especially Super Prime UK, is when you're spending the kind of money that you're spending on a super prime asset, you want service, you want great support and help on your property journey, and you're just not going to get that level of help with an online support business. So I think, yes, possibly the lower end of the market, I think there's a great marketplace there for someone that provides a great service. Super Prime UK, just don't think it's ever going to work.
No, it's maybe sort of a more regional trend which could survive, and we'll have to wait and see. The Bank of England Monetary Policy Committee meets today to discuss the UK base rates, and there are some analysts suggesting there will be a rates rise of a further 0.25%, which would take the UK base rate up to 0.5%. We'll have to bring you further news on that, but inflation is expected to remain elevated for this year and peak possibly about 6.5% in April. Some of the analysts are commentating as the new sort of regulated price caps on the household gas prices until that sort of takes an effect. However, as energy prices, they gradually start to stabilise, the supply chains regularise themselves. We expect inflation to curb as we move through to Q3, Q4 of 2022. And you know, the Bank of England, as we saw in December, Rob, did act very swiftly when inflation breached that 5% threshold. So as we saw the rises last week, whether that will spur them into action, another rate rise.
Interesting one. I think everyone across the world, the US obviously as well, Europe, record inflation numbers. I think Eurozone reported yesterday over 5%. Inflation across the zone. I think everyone's looking at interest rates as the mechanism to try and dampen that and control it. And it wouldn't surprise me if in 2022 we do see further changes, and it's to be expected.
Possible multiple interest rate rises. I mean, it won't come on consecutive months if the rates do rise. However, it will become almost, it will be a second rise in almost a month period. So we'll have to wait and see there and report back.
Anything else for this week, James?
That's it from me.
Brilliant. Thank you, everyone. Really appreciate your support. It's phenomenal. We love doing the show. We love sharing the most relevant intel data, market updates as we see on the ground, week in, week out, across the markets and areas we're working. We really appreciate and value all your support, and it's tremendous serving you and giving you back as much knowledge and expertise as we can. As you all know, we'll be here, same time, same place, every week with the Super Prime UK, with myself, Rob Cohen and James Wild. So thank you all for supporting us. Thanks for everything you do on the platforms. Thanks for the engagement, and we'll see you all next week. Thank you.
Thanks, Rob. Thanks so much, everyone.